Australians with a mortgage copped another crippling cost of living hit last Tuesday, the 13th interest rate rise in 18 months. For many people, it now means having to do the seemingly impossible, somehow conjure up money they simply don't have to avoid defaulting on their home loans. Cruelly, the rate rise came in the same week as two of the four major banks announced enormous profits. Westpac and NAB made more than $7 billion each. The current state of our economy raises many questions, but perhaps the most important is how much more pain can mortgage holders endure? For most of us, the idea of taking on raging white water in a flimsy kayak is nothing short of heart-stopping. But this is Kelly Travers' happy place. Not that it's a thrill the 30-year-old gets to experience much these days, as she struggles financially to keep her head above water. This morning you look like you're having a blast.
Yeah, it was a blast from the past.
And that is the past because you just can't afford to do it anymore?
No, I had to sell my gear to try to get some money under my belt, and I would love to go back to be able to paddle all the time, but I can't afford it.
Kelly wasn't just good at kayaking, she was world class. She represented her native New Zealand and up until a few years ago looked destined for a shot at the Olympics. That was until her blossoming sporting career was left high and dry by surging mortgage repayments on her apartment in Western Sydney. The Olympics were the dream for you, right?
Yeah, they were. I was hopeful, I was top 3 in New Zealand and I was paddling well. It was hopeful that I could have been able to make the Olympics, but I suppose I had to choose mortgage or paddling and maybe get to the Olympics or maybe never get there. And unfortunately, or fortunately, I chose, setting myself up for the future with that mortgage.
And where does that dream sit at the moment?
In the back of my mind. I think it will stay a dream for the rest of my life, unfortunately, as much as it hurts to say that.
Instead, Kelly is grinding herself into the ground in a losing battle to make ends meet. Monday to Friday, she works in childcare.
Thank you for calling Atmosphere Health and Fitness Club. This is Kelly.
At the weekends, you'll find her doing shifts at the gym.
Okay.
And on top of that, she babysits to bring in a little extra cash.
Hey.
3 jobs, 7 days a week.
Essentially, yeah. I work, I sleep, I eat. That's about it.
It's not really living, is it?
No, it's not. It's not long-term sustainable, but it's what I've got to do to cover the bills right now.
Like so many of us, Kelly is caught in the crushing vice of the cost of living crisis, squeezed ever tighter by rate rise after rate rise.
It's the younger generation that are really being hit hard at the moment. It's not the older generation. The older generation are benefiting because a lot of them have money in the bank and they're living on their investments. They've got a pay rise. It's the younger generation that are really struggling.
So in short, the rich are getting richer and the poor are just getting smashed.
Yes, the poor are getting smashed, that's right.
Few have their finger on the property pulse quite like Michael Pallier, boss of Sydney's Sotheby's International Realty. He's seen a generation of young families lured into what has become a vicious debt trap.
I've seen very good, hardworking people, couples, single people that have gone in and, saying we want to do the right thing, we want to buy a property, for when we get older, we'll have a nest egg. And they're the people that are really suffering.
When you see interest rates go up again and again, what's going through your mind?
A lot of young people went into the market listening to the Reserve Bank governor at the time saying that, you'll be safe, the rates probably won't go up for 2 or 3 years. They've then jumped in thinking this is a good time to get into the market. And then the rates started to go up and they're really the victims of this.
Kelly Travers' woes began when she and her boyfriend bought an apartment during COVID, close to the peak of the market.
I was so excited to have a place that I could call home, something that was mine. You know, the interest rates were low. I thought it was going to be fantastic. I'm finally paying my own mortgage rather than somebody else's mortgage.
But when their relationship ended, she was left to shoulder the costs on her own. Do you know loosely what the sums are like at the moment in terms of how much money you're making and how much of that goes to the mortgage?
Over 60% goes to the mortgage. So it's a lot, and then that doesn't include council rates, that doesn't include strata, that doesn't include any bills whatsoever. That is solely just the house.
You know, they describe home ownership as the dream. I mean, it sounds like you couldn't be further from living the dream.
Yeah. Every day, you know, I try not to look at all the bills, but every day I go to work and that financial stress is just so heavy that it just, honestly, it makes me want to cry.
Last week on Melbourne Cup Day, the Reserve Bank was taking a punt of its own.
In less than a minute, the Reserve Bank will hand down its monthly decision on interest rates, and it could...
Gambling that another hike in interest rates would rein in inflation.
Yep, so it's gone up at 0.25.
So there is the hike that we had been warned about.
For Kelly, it was the news she'd both expected and dreaded. There it is.
Definitely going to take some spirit out of the Melbourne Cup.
Have you done the maths on what this will cost you extra?
I think it's going to cost close to $200 a month. It's hard because you don't have any control over it. You know, there's nothing that I can do when they do announce these interest increases. But at the same time, when is it going to stop?
For many, we're now into perilous territory. Since May last year, the cash rate has rocketed from 0.1% to 4.35%, the highest level in 12 years. 13th time in a row that rates have gone up. Did the RBA go too far in your mind?
I think they've gone too far.
Stephen Koukoulis is a veteran economist who's been an advisor with Treasury and the Prime Minister's Department. He's a firm believer that mortgage holders are now being unnecessarily punished by the RBA.
They didn't need this last interest rate hike because the economy's slowing down, inflation's falling, unemployment's going up. It's a little bit like when you go to the doctor, they give you a course of medicine for 7 days. You take the first few tablets, oh, I'm not fixed. The doctor would say, have a cup of tea, wait a little while, the medicine will work. The interest rate hikes from the RBA, there were enough before last week's rate hike. The economy was responding to the previous rate hikes. So in a sense, they're overprescribing the medicine for a problem that's already being fixed.
Inflation was, of course, the problem that needed a remedy. But as far as Stephen is concerned, the dramatic hikes in interest rates are in danger of causing a potentially even more dire side effect, a recession.
Oh, just what I needed.
I'd say cheers, but not much to celebrate at the moment.
There's a real risk that the RBA has over-egged it. They've over-tightened interest rates, and that we do have a hard landing for the economy. And the reason why we economists focus on recessions and really dislike them intently, is because they cause economic pain. They cause people to lose jobs. That's a horrible thing. They cause businesses to shut. That's a bad thing.
What chance do you think there is that we're heading towards a recession?
Oh, it's close to 50-50 now. I think it's a genuine chance. It's a line ball call. We'll be watching the data just like the Reserve Bank watched the data to see whether that's a real probability.
High inflation hurts everyone, and it's really important for the Reserve Bank to get it back down to their target of 2 to 3%.
Do you think this current interest rate level is enough to get it there?
Based on our forecasts, yes, but I've also learned over my over 30 years in the business that a lot of things can happen that you don't expect.
Few people have seen the inner sanctum of the RBA, which is dictating so many of our lives. Lucy Ellis was right at the heart of it. She's now chief economist at Westpac, but up until last month, she'd been assistant governor at the Reserve Bank. She insists the RBA is keenly aware of just how badly people are hurting.
That's something that the policymakers always have to navigate, and they're very aware of it. People write to them. We got to see those letters. People do get very upset, and it's something that...
So you personally, even in that role, you'd see the letters from people saying, hey, you guys, you're killing me.
Yeah, absolutely. They'd pass them on, particularly if they were, made some good points. People do have some good points to make. It does give you a sense of what's important to people, and it reminds you of just oftentimes, this is about people who are actually struggling with the high cost of living.
There aren't too many struggles at Australia's big lenders. Last week, Westpac announced a $7.2 billion profit, up 26% on the previous financial year, while NAB reported a profit of $7.7 billion. But there is one bit of good news for mortgage holders.
Our current expectation is that rates should be able to stay where they are, and if rates start coming down, the earliest we think it would happen would be about September of next year.
Dwelling rent, insurance.
On that point, there's agreement from Stephen Koukoulis, who also believes that 2024 will be the year of interest rate relief.
The interest rate cutting cycle in Australia is still later rather than sooner. But I can look around the world, and interest rate cuts are being factored into the US, Europe, New Zealand, Canada. So around the world, they're factoring in interest rate cuts starting from the March, April, May period of 2024. So just as we hiked interest rates on the back of interest rate hikes around the world, we're probably going to be following the rest of the world in cutting interest rates too.
So I guess for people that are clinging on for dear life to mortgage repayments at the moment, the message is hang in there because you're almost through the worst of it.
For people with a big mortgage, yes, hang in there, beg, steal or borrow to make your repayments. If you can get through this difficult period of high interest rates, cost of living pressures, then there'll be a sigh of relief for everybody.
For Kelly Travers, who's holding on by her fingernails, it's a case of staying the course. For her and for all of us, the hope is that calmer waters are on the way, and they won't come a moment too soon. Have you thought about 2, 3, 5 years' time how this plays out?
No. I focus on today and tomorrow. And as hard as it is, I am proud that I'm paying my mortgage. It's just day to day how emotionally draining it is, how hard it is to pay the mortgage itself. At the same time, it's life. Like you have to deal with what you have. I mean, I'm fortunate that I have a roof over my head and something that I can call mine. Yes, it's a struggle, but there's got to be a break at some point.
Hello, I'm Tom Steinfort. Thank you for watching 60 Minutes Australia. Subscribe to our channel now for brand new stories and exclusive clips every week. And don't miss out on our extra minutes segments and full episodes of 60 Minutes, which are on 9now.com.au and the 9Now app.